Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange bringing you a review of this week's stock market. On Monday, economic news was light, so traders focused on the strength of the American consumer as well as analyzing how the Trump administration's policies will affect the economy, with a growing realization that fiscal stimulus and other programs may take longer to implement than originally anticipated. At market close, 10-year Treasuries yielded 2.41%, oil closed at $53.77 a barrel, and gold climbed to $1,229 an ounce, its highest level since last November. Markets closed down slightly. On Tuesday, the trade deficit for December came in at $44.3 billion compared to the prior month's $45.7 billion, boosted by strong exports. The JOLTS job openings report for December was 5.501 million, slightly less than the prior month, and more evidence of solid demand for labor. During the current earnings season, almost 70% of reports issued to date have topped earnings estimates, and markets ended the day up slightly, with the NASDAQ composite reaching a new high. On Wednesday, the EIA petroleum status report for the week ending February 3rd saw crude oil inventories jump a huge 13.8 million barrels, yet crude oil rose on the news to close at $52.34 a barrel. 10-year Treasuries yielded 2.33%, and gold continued to climb to settle at $1,239 an ounce. Markets closed mixed, however, the NASDAQ composite reached a new high. On Thursday, jobless claims for the week ending February 4th fell 12,000 to 234,000, one of its lowest levels on record. President Trump also said he would announce in the next few weeks a plan that would be, quote, phenomenal in terms of tax. Markets closed up strongly, with the S&P 500 and NASDAQ composite at record highs. On Friday, import prices for January rose 0.4% compared to the prior month's 0.5% gain, and export prices rose 0.1% compared to the prior month's 0.4% gain. Markets surged on the news and on optimism about Trump's upcoming tax plan. Now let's take a look at some stocks. Twitter shares fell more than 10% after the company reported fourth quarter revenue that fell short of Wall Street estimates, as the social network had trouble attracting advertisers. The company said revenue rose just 1% to $717 million in the fourth quarter, missing analyst estimates of $740 million. However, earnings were 16 cents a share, beating analyst estimates of 12 cents per share. Shares of Panera Bread, the bakery cafe restaurant operator, rose over 8%, reaching new highs after topping analyst expectations. The company reported fourth quarter earnings of $2.05 per share on $727.1 million in revenue, beating expectations of $2 per share. Full year 2016 adjusted earnings per share were $6.74, but Panera anticipates adjusted earnings in 2017 to increase to between $7.45 and $7.70 a share. On Tuesday, Disney reported fiscal first quarter earnings that fell short of Wall Street estimates, hurt by a decrease in subscribers and rising costs at ESPN. Total revenue fell 3% to $14.8 billion, while profit fell as much as 10% to $1.55 per share. Buffalo Wild Wings initially fell over 5% as the company reported earnings that missed analyst estimates. Wall Street analysts expected earnings of $1.27 per share, but the company only hit 87 cents on revenue of $494 million. However, shares quickly climbed back up over 11%. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.